Welcome back, everyone, to the Bitcoin Business Bureau. I'm your host, as always, LitecoinLeader. I wanted to share yet another story that is interesting this week. So many stories and so little time, but I wanted to get these videos out there. I want to give a hint that there is a special announcement coming next week. I am going to be at a meetup next weekend with Divvy Daddy in the Tennessee, Georgia area. But there's going to be some announcements made. It's coming soon. There's going to be an event coming up that we want to talk about in September. We'll give out the details. We'll give out the name of the event. We'll give out the third host that we're going to have with it. Some of you probably know who that is or have met him before, but I want to leave that as a mystery for right now. But you'll be hearing about it come Monday at the latest, I believe. So we just named the event. We're settling up on the site. We're settling up on how it's going to go. We're very excited about it and look forward to talk about it. It's coming up soon. But for now, let me share a story. Let me share my screen and talk about it. Whoops. There we go. And this story, sorry. So this is a story about a Virginia county, which I'm very familiar with, having lived in Maryland and the greater, I really hated this. I think they called it the DMV, the DC, Maryland, Virginia area. I hated that name anyway. So this is a Northern Virginia county, Fairfax County. And what they're doing is the Virginia county wants to put pension funds into DeFi yield farming. Now, I've seen people talking about this today or recently, and they're positioning this as a positive. I'm hesitant on that, but let's just go through the story. So the Virginia county, which is Fairfax County, wants to put pension funds into DeFi yield farming. They're going to make a decision in the next few days. This is as I read this on May 4th. Northern Virginia County of Fairfax has invested part of its pension fund into crypto and blockchain startups. Now it's looking to put money into DeFi yield farming. It's the Fairfax County Police Pension System. So what they're doing is they're looking to try and so Fairfax County is no stranger to the blockchain and currency sector. In 2019, it began investing pension fund into cryptos with projected returns of 9%. Fairfax crypto assets account for approximately 8% of its portfolio in total. Executive issued statements regarding the blockchain-related investments. They committed $10 million and pledged another $11 million, and so on and so on. So the United States took first place of the. Okay, anyway, I'm not going to go into the details list, but I want to just share the story and give some context and why I think this is not, in general, a good idea. Let me drop out of sharing my screen. So pension funds are at a crossroads right now. With everything that's going on in the economy right now, finding safe havens, especially for growth, is not easy. So they're looking to take on more risk to try to meet higher demands and higher promises for pension funds. So as more and more of that particular police force retire, or any group that pension fund represents, pick a pension fund. Let's say, I don't know, I'm in South Carolina. Let's just say the South Carolina Fireman Pension. I have no idea if that exists. I'm making it up. It could be Horry County, which is where Myrtle Beach is. I don't know, but pick a county. Let's just say your local county has a pension fund for your police, firemen, whomever. Okay. They have funds. Then they have a promise to spend a certain amount in the future as people retire. And they know how many people are going to retire. They had that forecasted out. What they're probably seeing, as most pensions are seeing right now, is that current assets cannot meet the demand. Like they may have $10 million or $100 million, whatever it is, but demand might be 100. The payouts will deplete the pension before everybody is paid out. So what are they going to do? They can't go with real estate because real estate's going down. Stocks are going down. Bonds are going down. Interest rates are going up. Mortgage-backed securities are rough. Where do they turn? They can't invest directly in this one did invest in cryptos as well, but now they're going for even riskier investments like DeFi. Now we've seen what's happened with Luna and we've seen what happened with Celsius. There's some risky investments out there. It's like you have different levels of risk within cryptos. 18,000 cryptos last I checked, probably even more now. Some of them are way more risky than others, and some of them are riskier than you even know. Like with what Luna had, that vulnerability written into the code that was exploited and just basically took Luna to practically zero. So now you have people's retirements and people that are managing their retirements, and granted, they're not putting 100% of it, they're putting 8 to 10% of it in these higher risk investments, but those numbers, that investment could go to zero, and then the pension is in that much more worse of a shape. So if you're in a pension fund and you have any say in the matter on what they're investing in, you may want to talk to them and say, hey, I'm really concerned about how the level of risk that you're taking on. And I understand that the DeFi returns, the return on investment can be double digit, 20, 30, 40% or higher. It could even be higher depending on how risky of a DeFi portfolio they put in. But can you imagine a pension manager trying to understand DeFi? Odds are what they would do is they would allocate the funds and they'd find a DeFi manager, someone that would have a skill set like I do, which I do DeFi for myself, and I've done it for and for other clients. Not financial advice, not that I'm offering that service or anything, but if I've had conversations about how to manage DeFi, and it can be very risky if you're going for like triple or quadruple digit percent returns. Like, there have been some DeFi projects that have like 1,000% return, but those are high risk, and you need to be on top of those like almost by the hour. So I don't know when they sleep. But there's less riskier ones that get 20, 30%. But as soon as you start getting into double digits, there's when you get to these investments and they're offering numbers that seem almost too good to be true. They could be very well too good to be true. So, Bitcoin and Ethereum have grown nicely over the years, as have a lot of the coins in the top 100. But when you get into the DeFi sector, like when I started this YouTube channel back in April of last year, it was April 1st last year, there were less than 9,000 coins. Last I checked, there were over 18,000. So we've doubled the population, more than doubled the population of crypto projects. And as I just pointed out, if you treat these as businesses, over 90% of businesses fail within the first year. So what are the odds that these extra 9,000 projects, or call it 10,000, that means 9,000 of the 10,000 aren't going to survive. So we've all heard the possibility that a lot of crypto projects will fall by the wayside. Look no further back than the .com collapse back in like the early 2000s. Pets.com, everybody was trying to get online. Everybody wanted to go there and deliver everything through a website, and a lot of them imploded. And pretty much Amazon and Yahoo and Google were pretty much the big three that survived. And Facebook. That's basically what survived from that era. If Facebook even dates back that long. I know Yahoo does, and so does Amazon. But my point is that there's going to be a lot of crypto projects that don't survive. And for a pension fund that's supposed to be low risk and have a retirement plan, if you're counting on your retirement plan to be there and your pension to be there, it could be a lot more at risk than you imagine. So keep an eye on, if you have a pension, keep an eye on what they're investing in. Talk to them if you're concerned about the level of risk they're taking on. But if they're doing things like DeFi and they're not taking if they're taking on extra risk that they shouldn't be taking on to try and make up for yields and try to make up for the numbers, I cross their fingers and I wish them well. I hope that it works out for them, but there's a lot of risk involved in that, as we've seen already this year in crypto. So that's my comments. I'd love to hear your feedback. Leave a comment down below. And again, stay tuned for that special announcement coming this week. I think this video is going to be airing before then. I'm going to put all these videos out, so I'm clear it out for Monday to make the announcement. So lot said today. I'm going to close the door on the bureau, say file leader one more time, and I will talk to you soon. Take care.